If you clicked on this video, well then chances are you feel like you are at the break-even stage of your trading career. Now, by all means, this is a massive accomplishment, okay? Most people will never in their entire life get to the stage where you're currently at. It is also the most difficult one of all because it feels like you are stagnant, right? It feels like nothing is moving. You lost momentum. Nothing seems to be going right. And that is perfectly normal. You see, I always view this break even stage of a trader's career as the test, right? So it is the ultimate test that filters out the people who are not meant to be here in the first place. And all you have to do to pass this test is to survive through patience. Because this is going to take a long time, regardless of what you fine tune, regardless of your approach to this overall situation. It is going to take a long time because it is a test to filter out the people who are not meant to be here in the first place. Now, you win this test again by being patient. It is simply a game of patience. If you cannot remain patient for the time required, which is super individual, well, then you are probably one of the individuals that are going to get filters out because you're not meant to be here in the first place. Now, the good news about being in the break-even stage is that you are very, very close to that final breakthrough. All right. You have to imagine that you are trying to penetrate something and eventually it will snap and you will burst. Right. And you're right there. You just need a little fine tuning in your systems and in your brain in order to finally have that breakthrough that you're looking for. All right. Now, the first thing that we're going to be talking about when it comes to having that breakthrough is the obvious, right? We want to focus on the things that we can actually control. A lot of people have this idea that we as traders have control of the majority of things that are happening, which could not be further from the truth, okay? In fact, it's the quite opposite. We have control of very, very little. We have control of the amount of risk that we put on, right? And that's essentially it. We have control of clicking buy and sell, and we have control over the amount of risk that we put on. That's what we can control as traders. We cannot control whether the market goes up, sideways, or down. What we can control is the amount of risk that we put on. So that's the first thing that we're going to focus on. The first thing that you need to focus on is making sure that your risk management is exactly where it needs to be. Right? A lot of people, when they get to this break-even stage, they are faced with this overwhelming emotion of wanting to put on more risk, right? And this here is the perfect example of less is more. You've heard this saying before. Generally in life, this saying gets thrown around all the time, less is more. But I have never seen it be more applicable than in the industry of trading. This industry as a whole is truly less is more. That's what it means. Less is truly more when it comes to trading. And so when you apply that to risk management specifically, well then less is more, meaning the smaller you go in terms of risk, the higher the potential reward is going to be, in my experience. Because if I were to ask you now, why is it that the vast majority of traders are failing? Is it for, technical reasons, or is it psychological reasons? The vast majority of you would probably be able to tell me that it is indeed for psychological reasons. And so when you lower that amount of risk, you automatically lower your possibility of making emotional mistakes, right? Because the vast majority of emotion-driven actions is taking when there is something that makes your heart go up, right? You're nervous, right? You're doing something you're not supposed to do. And that is, for example, putting on too much risk, right? That immediately opens up way more possibilities of making a mental mistake than if you are just trading with a very low size. And then eventually, as you go on, you can up that size, right? Don't expect your breakthrough to just be thousands and thousands of dollars every month. No, take it very, very slow and then build your account up as you move on. Then the higher the account goes, right, automatically you're going to make more money. Because let's say that, okay, you are now at a point in your life where you are willing to risk 0.25%, right? Let's say 0.5%. And then let's say that you have, an account of $1,000. That is not a lot of money, right? But if you now slowly grow that account to the point where it is now at $100,000, well, then 0.5% is now a lot more, right? That means you're now making $500 every single time you are winning a trade if you are, risking 0.5% at a 1-to-1 R. Possibly even way more than that. And so it's not a percentage problem, it is a capital problem. And you have to build up your account, and the percentage will naturally follow, of course. Right? But people have it all wrong. They think that, okay, I've been trading for 3 years now, 4 years. I'm finally turning profitable. That means that I should, make the money that person A is making, which could not be further from the truth, because you have to do your due diligence. You have to build up that trading account. You have to go through the process of building up a trading account using the same amount of risk, because naturally, as your account grows, when you are trading from a percentage point of view, your income grows. So it's not a capital problem, or it is a capital problem. It's not a risk problem, is what I mean. Do not up your risk just because you want to make more money, right? Grow your account and you will naturally make more money. That's how you should view it. The vast majority of losing traders lose because of greed. They want more money, which is natural. We all want more money, right? I want more money. The person watching this wants more money. But what you're not going to do if you are a rational, profitable trader is to up your risk because you want more money. Now, if you want more money, then you have to grow your account, sticking to the same percentage of risk, because naturally your income will grow as your account grows. And that is how you treat risk management from a mature point of view. Now, most people get this wrong, and a lot of people never get it right. But I'm telling you now, focus on risk management, because what else are you going to focus on? It is literally one of the only things that you can control. And so it makes sense to put, basically all your time and focus and attention towards that thing. Because what else are you going to do? You're going to try and focus on whether the market goes up or down? Well, you can't control that, so that's a waste of time, right? But you can control the amount of risk that you put on. So double down on it and figure out exactly what level of risk you need to have in order to be comfortable. Now, what do I mean by comfortable? I mean, find a risk approach that does not necessarily raise your heart every time you put on a trade. Find a risk where you will not feel it when you lose that money. Like, that is what I always tell people. You have to figure out how much money you are genuinely willing to lose, right? And then you have to accept the fact that this money can and will likely be lost. And if you have predefined that and accepted that before you put on the trade, well, then you are leaving out 99% of the mental mistakes that would follow if you didn't. Right? Mark Douglas talks about this all the time in Trading in the Zone. Predefine your risk and you won't have a problem. The problem is people understand that you should predefine your risk, but they don't do it. They say, okay, I'm going to lose this, blah, blah, whatever. Put it on. But their brain will naturally think about the positives and not the negatives. So for example, I'm going to risk $1,000 here. Right? I'm going to go for 10R. That means if this hits take profit, I'm going to make $10,000. Right? That's rent for 10 months. Right? That means that, I can buy this, I can buy that, I can look cool, I can go here, I can go there. That's where your mind goes. But it doesn't go to, I'm probably going to lose this money here. And that means, that's a month or two worth of rent going out the window, right? Can I afford food after this? Can I pay my bills next month? All of these things are not really taken into consideration or into the equation, because your mind will naturally pivot towards the positives, which this trade could bring. And that's where a lot of people mess up, right? So you have to train your mind to naturally always go to the worst case scenario when you're talking about risk management and trading, and not pivot towards the positives, right? So you almost have to tell yourself that, okay, I'm basically just giving away $1,000 here. Am I comfortable doing that? And until you are truly comfortable doing that, it'll be very, very hard for you to turn profitable. Now, naturally, will it affect you sometimes when you lose money? Of course. Are you going to make mistakes where you're going to risk too much and feel it afterwards? Absolutely. We're all human. It's bound to happen. But the vast majority of the time, you need to stay disciplined to your risk management. Now, not only to your risk management, because trading or success as a whole can be broken down into a very simple manner. Discipline. It can all be tied back to discipline. Regardless of the industry, regardless of what you do, it all comes back to discipline. Because without it, you're not going to achieve anything of significance. Now, it doesn't matter whether you're an entrepreneur, whether you want to climb the corporate ladder, it doesn't matter. It all requires discipline, right? Because why does these things require discipline? Well, it requires discipline because you're competing against other people. And if you want to be the best, well, then you have to outperform the vast majority of these people. And how are you going to do that? Well, you're going to do that by doing the things that they don't want to do. And the way that you do that is through discipline. Now, how does one develop discipline? A lot of people have a wrong approach to discipline as a whole, right? Discipline is not this individual thing to individual things, right? No, it is an overall thing, which means that you have to gain discipline from an external source, and then you can focus it elsewhere. And what I mean by that is, don't try to develop discipline on the market itself. Get discipline in your outside life, in your actual life, from external things, and that will naturally transform into the market itself. Because as I said, discipline is not, an individually focused thing. It's an overall thing. And so if you can gain a certain level of discipline outside of the market, naturally you will have that in the market. You will apply that in the market, right? And how do we then do that? Well, discipline is quite easy. Discipline is doing what you hate, but do it like you love it. That's a Mike Tyson quote, but it's very true. Figure out what you don't want to do and then force yourself to do it. Now, what is that? Well, when I wake up in here every morning, I'm doing my bed. Do I want to do my bed? Not necessarily. It would be much easier if I could just bounce straight to work or bounce right on the balcony and have my morning coffee. That'd be a lot easier, but that's not what I'm going to do, right? No, I'm going to do my bed because I don't want to do it. Do I want to go run? No, I'm going to go run then. I don't want to go to the gym today. I'm going to go to the gym today. I don't want to clean the dishes. I'm going to clean the dishes. All of these things, when you do them for long enough, you start to realize that doing these hard things make the hard things become easy. And that will naturally transform and reflect right onto your P&L. So it's all about discipline. Every single thing you do in your life is about discipline. So double down on it. Now, the biggest thing that personally held me back when I was at the stage that you were probably at watching this video was the fact that my losing days were always bigger than my winning days. And there was a very specific reason for that. The reason for this was because I had no problem in calling it a day when I had made money, right? But I had a huge problem calling it a day when I lost money. Now, what does that mean? Well, that means that when I win one time during the day and then I stop. Now, when I lose, I will lose one time and I won't stop. So I'll lose another time and another time and another time. And that is what held me back. It essentially made sure that my losing days were bigger than my winning days because I didn't have the discipline to trade once per day, regardless of that being take profit, stop loss, or break even. I did not have the discipline to do that. And again, do you see what I'm saying? It's a matter of discipline once again. Now, it all changed for me once I actually stuck to one trade per day. And I guarantee you, I've seen this live with many of my students when I was teaching. It transformed their P&L. It transformed their life, essentially, once they learned how to stick to a singular trade throughout a day. And again, that's a matter of discipline. Take one trade, regardless of that being a loser, break-even trade, or a winner. You take one and you move on, right? You come on, look for your system, place the trade, move on with your life, rinse and repeat. That's it. You see, people have the overall wrong approach to this because what I just explained might come off as extremely boring and mundane, and that is exactly what it is. That is exactly what it is. If you are looking for excitement and fun in all of these different things, well, then you are simply in the wrong industry. Trading is not meant to be fun or interesting or a happy place. No, it is mundane and it is boring. It's finance. It's extremely boring, right? And it's not meant to be fun. For years, decades, you are looking for the exact same pattern to appear in the market. You're going to execute with the exact same risk, and you're going to exit at the exact same place for possibly decades. That is not fun. But it's not meant to be fun. right? And the people that are looking for fun in this industry are the people who are over risking, FOMO trading, and all these different mistakes. Those are the people who actually have fun. And those are also the people who will never make money. So choose whether you want to have fun or actually make money. Because I'm not looking for fun on the market. I'm looking for fun in my life outside the market, right? I don't care if the work that I'm doing is boring as long as it makes me money. I'm not looking for fun. I'm not supposed to have fun all the time, right? So stop trying to make it fun and interesting. Accept that this is a boring industry. Understand that it can make you money, and then accept it and move on. That's how you eventually end up making loads of money in this industry, right? Now, it's not just this industry, it's any industry. You're not supposed to, as a man, to constantly have fun. We can save that for later. It is boring, and until you accept the fact that it is boring, you're not going to go anywhere. Simple as that. Now, speaking of boredom, one of the most important parts when you are at the break-even stage is truly and honestly data collection. Now, you've heard this hundreds, possibly thousands of times, that data collection is one of the most important things in trading, and it truly is. Now, I, much like yourself, didn't really care about this at one point in my career. You know, it didn't really interest me. It wasn't really, why would I be doing this, right? I'm essentially doing the most boring part of my entire career, right? I'm writing up stuff all the time. It doesn't really make sense. I don't feel like I'm learning anything. You know, I've been collecting data for half a year. I truly don't feel like it has made any difference, but it has. And if it hasn't, you're doing it wrong, right? Let me tell you why this is important. It's important because when you are at the break-even stage, besides the psychological aspects, which we have already covered, there's the technical aspect, right? And very, very likely, your system is flawed somehow, right? No system is perfect. Yours isn't. Mine isn't. But we can refine it. But the only way that we can actually refine it is if we know what's wrong. Let me give you an example. A few years ago, I was extremely terrible when it came to very one-sided markets or trending markets. I was always losing money when the market was trending in a certain direction, when it was a very one-sided market, whether that was up or down. I was making money in consolidating markets, funny enough, but when it was a trending market, it was insanely difficult for me to adapt. And the only reason why I figured out that that was my core problem was because I had collected data for years on end. And when I ran through that data, well, then I could clearly see a pattern that tended to repeat. And that was my losing days are most likely on a trending day in a very one-sided market. But the only reason why I was able to see that was because I had collected data. And then I adjusted my systems because of that data, right? So I crafted a system that was based on top of data and not just random technical analysis and advice from a random YouTuber. No, my systems are crafted on genuine data because I collected it. Now, I did go years without collecting data, so I'm no different than you. I'm not sitting here, putting myself on a pedestal. No, not at all. And I don't want you to see this video as I'm talking to you specifically. You see, I always get these comments that are like, well, when you said this here, that was actually not correct. Well, I don't care about that because when I am doing these videos, I'm essentially trying my best to talk to myself years ago. So your opinion regarding what I say, it couldn't affect me less. I don't care because I'm not talking to you. I'm talking to myself years ago. This is the advice that I wish somebody had given me when I was first starting out. What you're doing now is extremely difficult, but you wanted a lot on your plate, I imagine. You wanted to eat, right? You wanted things. You wanted the cars, the watches, the women, the fun, all of these things. Maybe not even that, maybe just freedom, right? But freedom comes at a cost. It's not something easily attained, right? So when you ask for a lot to eat, you can't complain when there's a lot on your plate, which is why you can't quit. So to pass this test that filters out the people that weren't meant to be here in the first place, all you have to do is stay patient, focus on what you can control, and develop a relentless discipline, right? You know exactly where you're going. You have it all in your mind. Don't worry about all the noise. This is a mistake that newer traders make as well. Not even newer traders, experienced traders too. They let in all the noise, right? When you are at the stage that you're currently at, you have a system in place. You know how the market moves, right? You likely have a good idea and understanding of the human mind when it comes to trading. And so all of this information that you're letting in from YouTube, Twitter, and TikTok is noise. It's not information, it's noise. So what you have to do is filter that out and just stay, tunnel vision towards that one goal, which you know exactly what it is. You have one mission, execute it. All you have to do is focus on discipline, patience, and the things that you can't control as an actual trader. Don't worry about anything else. Don't worry about what this guy says. Don't worry about what that guy says. Yes, he might have more experience than you. And yes, he might live a life that you want to live. And he could possibly give you great advice when it comes to discipline in all these different areas in your life. But when it comes to market information, do not listen to anyone because you have a good enough understanding of the market as a whole to be able to turn this into a full-time living. So any external information that's coming your way is noise, and you have to block it out. And that's how you eventually break through that barrier that you're currently trying to break through. Now, it's not easy, but it's not meant to be easy. If it was easy, well, then probably the reward wouldn't be that great. Now, the last thing I want to talk about is understanding less is more. I've said this earlier in this video, less is truly more. And it also applies to actual screen time within the market. Now, when you first start out trading, you are going to spend a very long time studying the market, understanding it, backtesting. All of these different things will take up a lot of your time. But when you are at the stage which you're currently at, there's no need to look at your screen for 12 hours a day. Now, the problem here is that people that are driven and ambitious, which I imagine a lot of you are, will feel this need to constantly be working. And when you're not working, you feel like you are wasting your time, or you don't deserve what you want to get. But I need you to understand that trading is totally different. Trading is unlike any other business. And you cannot compare trading to running a regular business, okay? Less is more, also when it comes to your screen. Don't spend an unnecessary amount of time in front of your screen, in front of the market, because what you're doing is essentially opening yourself up to unnecessary risk, right? There is no reason for you to sit there and look at the market for that long at a time, because eventually you will convince yourself that, this right here looks like a perfect long or short, and you're going to make a mistake. And I don't get why people sit and watch the market for that long at a time for no reason, because this is one of the perks that trading offers. This is one of the benefits that comes with being a trader. You don't have to spend a lot of time on it. And that's why I love trading. That's why I will never quit, because I can spend very little amount of time on this craft because I have spent a lot of time in the past. It allows me to now not spend very long doing it, but still print me money, which means I can now focus elsewhere. I can focus on another business that can then generate me more money. I can generate cash flow from this business and still be in a great position to trade, because I don't have to sit there and watch my screen for 8 hours a day. So if you are doing that, you do not know how to manage your time correctly. Because if you feel like you're wasting time when you're not looking at the screen, no, you are actually wasting time when you are looking at the screen. So what I need you to do is pick out a few hours a day and then tell yourself, I'm going to look for a trade within this time period. And if nothing appears, I'm going to close my computer and focus on something else. Now, if you purely want to trade, well, then focus on things that's going to benefit you in the market, which I already talked about, has to be from an external source. Go to the gym, hobbies, food, all of these different things will eventually reflect right onto your P&L. So do those things instead of sitting there and exposing yourself to unnecessary risk. So thank you a lot for watching. And as I said, this was more meant to be a FaceTime call with my younger self and some of the advice that I definitely needed to hear in the early stages of my career. So I hope you enjoyed. Now, if you did, make sure to like the video, subscribe to the channel, and I promise to return with more content.